Bitcoin is a bank in cyberspace. Monetary energy, ore of the earth, doubles every year. Listen to my words. Selling doesn't hurt. Selling is absurd. It's like cutting off your wings, but you want to be a bird.
Welcome back, guys. Gonna be doing a quick update today. I know recently we've been having some audio issues, but hopefully we shouldn't have any issues today. But let's just have a quick look at the market cap currently. So market cap is holding around that $1.5 trillion. We can check that later if you want as well, but ultimately the global volume is not really moving, it's just stagnant. BTC is kind of struggling at the 45%, so 44.8, but around the 45%. Ethereum just following suit basically. If you look at the 24-hour volume, still holding strong. Ethereum is 1 billion more. BTC is actually holding pretty steady at the 35. So we had a 24-hour high of 37 and then we had the low of 35, but there's more to it. So let's have a look at this. So we're not going to look at all of this. Also, you can see we've got 10,509 coins now, and you know how I feel about all the altcoins. They're just scams, right? Very simple. So let's move straight into BTC because I got a few things, and today's main video subject is actually regarding the death cross, because it's just coming on and on and on, and it's just, I think it's gone beyond bearable. So I thought, okay, I'm gonna make a chart and I'll show you guys some fascinating things about the 50-day moving average and the 200-day moving average, or in fact when they cross over, the death cross. I want to show you something about the death cross. So before we go into this, let's go into and see what the dominance is doing. So you can see the dominance is struggling to get above this specific zone. So as soon as we can do that, we will see better things in the market. And if the dominance comes down here, and as long as the market is still bullish, then we might see an altcoin pump. We don't know. So we just got to wait for this one. This is definitely right now, everything, all the focus is on BTC. Right, this is a chart we showed recently. I think I showed it on another video as well, and we were talking about this particular area here. So let's move it into the 4-hourly. Actually, let's go into the 4-hourly. So what we're talking about is how we need to create a specific trend. Now, we originally thought we can have a trend line here. It's not valid, as I mentioned to you on the previous video. So now what we have to do is to move it around here. So you can see we've got the wick. Actually, I'll do the body. So let's do the body here and let's do a body here, right? So we still need a third point, right? So we need a third point. Remember, for us to confirm a trend, we need to have a third point, right? When we have a third point, we've confirmed it. So there's good buying opportunities. Also, you know, a lot of people talked about the double bottom, and I said the double bottom is not here because this is the first bottom. Technically, you can say a double bottom. We can have a trend line here, but this trend line also is in play, which means that we should, so now that we've had, so for example, we've had this up to here, for example, we should have another point here somewhere before we shoot up, right? So we need to have a third point. Whatever happens, to confirm a trend line, we need to have a third point. And also looking at trend confirmations, there's another thing we have to look at as well. So remember, we've got 1 point here. Technically, we've got 2 points here as well, so 3 points here. But if we get the technicality out and say, well, we need a full confirmation, we need a pattern. And what we're saying is we've had this knock here, come down, knock here, come down, right down here. We need to have another pattern here, and this is the pattern I'm looking for, where I'm saying we might have a actual what do you call this, a inverse head and shoulders, right? So it's not the bearish one, it's a bullish head and shoulders, right? This is what I'm looking for. So we need a third point. We've got 1, 2, 3. We need a third point, and on the fourth one we're going to break out. So I've just updated this. So basically, obviously, we've got the trend line now going down. There's another funny fact about this. So we've got this specific trend line here. Funny thing is I can actually draw one more trend line now. So from here to approximately here, all right, or I should put it on the body actually. Let's do a body one here. So let's do a red one here with a body on this specific video. So whatever I'm doing right now, guys, apart from these charts, which were pre-done in the previous video, you've seen that. I'm doing whatever's I'm doing right now is just in the video. I haven't done this before, so I don't know what's going on. So we can see another trend here. So we say, okay, fine, this is another little trend forming here. We need to break this trend and we need to go back up, right? So this is what we're hoping for, and the pattern we're looking at this present moment. We're looking at this particular pattern and we're saying, right, this is the curve we got. This would be our triangle, and we need to break out of this particular triangle and get back up again. Right, so let's move over to, so this is our BLX chart. Now on our BLX chart, you can see, and what I'm going to do is take these drawings off just for a second, just to show you. So you can see we're hovering around this particular Fibonacci level on the logarithmic, right? So you can see we're struggling to keep above this and stay above this. And so far, I mean, a few days ago, you can see on the 13th of June, we did push above. We just got rejected a little bit, but this is more of a, this is where the trend is coming, right? So when we look at the trend, we can see that we're actually, it's not that bad. We're being, sorry, one second. So actually what we're seeing is something similar like this, where we are trying to build this trend. And this is the same trend that we saw earlier on. So let's just get rid of these drawings for now. Move over to this one. Now this, a lot of you guys didn't see this. So I did something recently and I mentioned it on yesterday's video. I said how I'll be basically doing it for the members. Now this particular chart I drew for the members, and I want to show you here. So this one, you can see members only, available to members only. Members got this update yesterday. All right, so only members got this update. So if you're not a member, you wouldn't see something like this. And I'm doing this for a reason, because I, as you know, on the recent videos where I was kind of really annoyed about certain things and whatnot, but this is just a trial. Listen, nobody needs to be a member. I'll probably adjust a few things, and even the membership as well, because remember, I'm not doing it for the money, but I just want serious people. You know, that's what it was. I was so annoyed because of some people, right? And unfortunately, it just takes one. It genuinely just takes one. But this is what we said. So I gave my signal here. I said, look, we are coming back to test the 35k mark. Should be a great buy opportunity. No financial advice, obviously, right? So this is what I advise people, whoever was a member, and actually members like my private investors and private clients, they did get this chart directly sent to them as well. Now this is what we're talking about, right? So we're talking about this particular chart, and I've taken a screenshot for this, and this will probably be the thumbnail for this video. Now let's go into this area here and try and show you what I'm seeing, right? I know you can see a lot of patterns here, but this is the death cross. This is where it's going to be happening, or it's already decided to happen, right? So let's zoom out and show you what I'm seeing so far. So I'll explain all these patterns to you one by one so you'll understand. So I've color coded them, so it's all easier for all of you guys to see and understand what's going on. So on this specific chart, we have data from the, from I think, what was it? What's the first candle? About 20, so February, just say February 2015. So we've got data here from 2015, right? So this would be after the 2013 bull run, which is okay. It's a sufficient data. It's not that bad. Now, what we're looking here is every time we had a dip, we're tracking that. So these are where we had the death cross, right? This is where we had the golden cross. So we're tracking that and we're seeing, okay, what's the differences and what is this actually telling us? Because I know there's a lot of confusion, and I'm getting a lot of confusion from our from some of the clients that I have, and they're like, dude, you're not talking about death cross. How come you're so bullish in the death cross? You're not really bearish where the whole market wants to be bearish. Number one rule, when the market says, everybody says we are going down, we're most likely to go up. You always do the opposite of the herd. That's a rule. Okay, so we follow this rule. Now let's see what happens when a death cross happens, right? So number one thing, you can see this white box, I've got a green box and I've got an orange box, and I'll explain each part of these boxes. So number one, we started to have a dump from this particular section until we hit the death cross. So let me zoom in, all right? So the data you're seeing here is actually this data. So we already did all the damage before this even flashed. That's what you need to understand. The damage was done before this flashed. Okay, so this is what this is. Also, as you can see, the bullish trend. So from here, we broke the trend and we started moving back up way before it flashed that we did it. Now, what happens during this particular time? This is what you have to understand. So this is why I've got this arc here, right? This curve here. What happens? Well, I'll tell you what happens. From this point to this point, retail panic, retail stay away. Who do you think buys around these levels? Institutions. So when you've got the signal, institutions stop buying, because now they know you're going to probably dump more, whatever. You're going to freak out even more because we got the death cross. But they already bought it. They're just waiting for you. So when everybody settles down, they will front run you. And then the signal, this stupid signal that everybody follows, you're going to see a golden cross. Everyone's going to talk about a golden cross. And what happens? We're going to have a golden cross saying, oh, the market is bullish now. Well, guess what? They bought already. So when we start doing measurements, so for example, this was the dump, right? This was the damage which showed up here, right? So what we're seeing is this damage that was done here was done over 38 days. And when did you see it? Let's have a look and see. So let's do some measurements. So whatever I'm doing right now, guys, I haven't done this before, right? This is no pre-planning. This is me doing it right in front of you. So we're doing it here, right? And then we do another one just to show you. So once the damage was done, it flashed, and you can see this thing flashed. So we had, say, approximately 37, 38 days where the damage happened. And then here, this particular zone, 26 days later. So when you add this together, right, you have another map. So when did it flash? Well, technically, from the point damage was starting, it was 64 bars. So 64 days later, we had this death cross showing up. Do you understand the significance of this? So please stay clear-headed, level-headed, and start understanding what this actually means, right? So let's get rid of these right now. So obviously then the market starts to go bullish, right? So we've started to go bullish up to this particular level here. We're going all bullish. How long did it take for it to signal, right? So from this point, let's go from this particular point where we had the death cross. And when did it signal that we're going bullish? Let's have a look. This candle here, right? So up to this candle here, which says we're going bullish. 44 days. So we started becoming bullish from this particular death cross candle. And yet nobody realized until this flashed. So is it actually something you can use? Well, I don't think so. This is why I don't use it. I don't really care. I just watch it as an average moving indicator for me to balance things out. But I don't rely on this because it tells me 44 days later. But by that time, we're already on the peak. So what was why would I really follow this? So the damage is here, and it's flashing the death cross here. The gains have already been made from this point to this point, right? So when the whales decided to jump back in, say from this candle up to where it flashed, right? Up to where it flashed. Let's just do up to here, where it flashed. Actually, this candle here, right? They were already 65% up, 65% up. And then you've got your signal, and then all the media, news outlets, everybody's flashing, all the YouTube guys come in. Oh, we had a golden cross. Come on in, guys. Well, everyone's accumulated from here, and you've come into here. This is when you get wrecked because we're monetizing on you. I'm just giving you clear-cut information, right? So, end of the day, please understand what we're talking about, because there's a lot of confusion, and I think too many people take too many things for granted. Now, what happens after a death cross finishes and a golden cross enters? Of course, every single YouTuber will show you this, or every single social media or whatever will end up showing you this data. Oh, look, after the golden cross, we did this. Well, no, you actually got to add this, because when you add this to it, when you add this specific data, you see something else. You see that we had the bottom here from this point, from the moment of the main dump to this, we had a 10,000% increase on this particular time frame, right? And this takes us back to 2017. This was the run. This was where they bought, and this is where they dumped on you. Fair play, right? We got all of this information. I hope so, right? So that's what you're looking at. So obviously this should be where you buy. Now, if you remember previously, there was a few videos where I mentioned there's a dip and then there's the dip, and we talked about it. And I'm going to move over to that particular one. And the dip was around the 30K, right? So we were all prepared to buy around the 30K. We had a ridiculous buy order. Market's not going to go there. We said 30K, we buy. So everybody that bought the dip. We all bought the dip, right? So once we bought the dip, we cashed out, we bought the dip. Now we're ready again. So let's move over to 2017 and see what happened. So market starts to dump from this particular range here, but we get the signal in March. We dumped in 18. So why the hell did we get a signal in March? Has anyone even questioned this? So, oh, we just had a death cross. Well, hold on, the market's already dumped. Market dumped, and you can see clearly here how far the market dumped, right? So the market dumped to this particular point was 70%. Market dumped 70%. And then we had the death cross, which dumped it even further. Fair play, but that's because you guys didn't know. You were waiting for this death cross to confirm for you to sell when the whales already sold here. Right? So do you understand what I'm trying to say right now? Okay, market goes down, everything's fine. We're in this curve, we come back, we have a golden cross. Well, when you had a golden cross here, but the whales were picking it up here. So again, you got to look at the difference from this area to this particular area. So this particular candle, again, they were up 70% while you bought it at a 70% more expensive, so you can confirm. Now, once that happened, say, okay, it's happened now. Let's see how far we can go, right? So you come back down here. Again, from here to here, if you do, and I can do this measurement all day long, right, guys, just to show you, right? Let's just do another measurement, right? So we had a golden cross. Already you're too late. You bought it 70%. Whales said, okay, we're going to take some profits. And then from here to here, we had 117 bars, another death cross. We should have sold here, not here. Do you understand what I'm trying to say? The whales bought here, right? You bought here, whales sold here, you sold here. This is a common mistake everybody's making, right? You know, these are just for your buyers and sellers. A lot of guys that are doing spot trades, this is actually for you, right? It's not even the most of the thing. So here we've had this situation, right? So we come back and we're like, okay, this is 2019, right? 2019, okay, we have all of this, no worries. We have a golden. Well, this is where they bought before you had your golden signal again. And I'm just doing this, honestly, I'm just, because I have to, because the thing is a lot of people don't understand. Again, we had 60 days. So people, the institution bought it here. We got the signal here because it's a lagging indicator. It's a lagging indicator. So we saw the golden cross 60 days after the buy. Again, 2020, we have a dump. We have a dump from 2019. So February 2020, we have a dump. And we only get to see the dump or the golden, the death cross when we see it in March 24. But by that time, look, March 13, 2 weeks prior to you, everyone else bought it. And then you saw the golden cross. Oh yeah, we're going to move up now. Well, guess what? We bought it here to here and we're moving. We're already up. We are already up, right? So when we buy from here to here, we are already 146% up. Does that make any sense to you now? So obviously then you come in, you the retail come in and you say, okay, we saw a golden cross, everyone's signaling. So this is 60 days later, right? From here to here, right? 60, 70 days later, all the, what do you call this, social media and everything, everyone comes out, oh, we just saw a golden cross, right? Everyone pumps their videos and everything, get 100,000 views, right? That's it. You know, we're going to move to, of course we're going to move up because we already moved up from here. So then people are saying, oh, now we're going to move up, we're going to go there. That's fine, no worries. So what did we do, right, after you came in? So these boys, they made, right, up to this particular level, they made 1,500%, right? So how much did you make when you got into the golden cross and you came from your golden cross? Well, you made, let's have a look. So you made 800%, whereas in institutions made 1,500%. Does that make any sense to you? I hope it does, right? So now let's get rid of these two, right? So let's see what happened here. Same story. So this was our buy the dip opportunity. Buy as much as you can. This is the point where I've mentioned on another video, sell your house. Can you imagine what I said? I said, sell your house. So we're talking about a particular scenario where I've said, sell your house, right? So let's go here and let's get the Fibonacci out. Right? So we've got the Fibonacci out, and I mentioned how when we enter this specific zone, right, I may have had a different color then, but I've said how if we enter this zone and we break out of this zone, this is where you sell your house. Do you remember that video? Most of my old viewers remember this particular video. Well, this was the opportunity. You buy the dip. There is no other dips. There's no dips. You save and you buy this one dip, right? Now, we've obviously bought this one dip, so let's get rid of this for a second. So we bought this dip, right? What we saw, right, what we saw was the information that's being fed to us. So the information you have to understand is we started dumping from here, okay? But we didn't really get the confirmation of the dumping, right? So let's put it up to this candle here right now. Now, we didn't get the confirmation, obviously, from here. Until here, we didn't really get a confirmation that this is the dump, right? But what I'm trying to say, the 50-day moving average should have signaled us 67 days ago. 67, if this was an accurate indicator, it should have signaled us 67 days ago. It didn't, right? So obviously we had the confirmation that we're going to have a dump from here. So we had a dump candle, and as you can see, 47 days ago, 42, 47, whatever you want to call it, right? 42 days ago, right? So just say 40 days ago. 40 days ago, the signal should have come in. So this 50-day moving average isn't giving you any accurate data. So this is why I get frustrated, because people just do not understand. It's giving you, telling you today what happened 47 days ago or 42 days ago. You still want to rely on this, because now what's going to happen is the market's going to start moving back up, and we're going to have a pattern. For example, let's see if I can copy this. This will be quite hilarious, right? Let's see if I can copy this, right? Give me a second. Let's see. Let's go. Where is it? Let's see if this is the one. Tango sign. Nope. Let's have a look if it's this one. Bar pattern. There we go. Let's grab this, right? So what we're going to have is a situation like from here to here. So let's copy this. Let's copy this. Let's bring this over. Let's bring this over. And I'm just showing you, this is how nuts it is, right? So we've got this, right? So this is what's going to happen. Right, so we're just copying a bar from 2020 just to show you how pathetic everything is. So we had the dump here. We've had our dump, right? You've got your dump confirmation here. No, 40, 50, whatever days. Let's just forget all of this. Let's just actually let's carry on with this, right? Let's bring it here. Let's just call it here. So we've got 42 days later, you get your confirmation. Remember, the dump started here. So we're following this exact pattern, by the way. You just saw me copy the pattern from there. So we see this, fair play. Now we come here, right? We're coming here. We're going to go down, as you can see. We're going to follow exactly what we did. We're going to follow down up to here. And we're going to get our confirmation that we're moving back up here. So we're going to get a confirmation here that we're going up, just if we're following this scenario. Well, when is the confirmation coming? At the end of July. But when are we starting to move back up again? When are we going to? We're going to do it now. So everyone will get excited a month later, maybe even 2 months later. I mean, this is not exact to the pattern, but what point I'm trying to make here, you're going to see a golden cross, always late. You're going to see a death cross, always late. And this is what really frustrates me, that even though we are trying so hard to explain to people that, guys, these data points, these moving averages are only for rough reference. They are not actual data points. They do not matter, right? They do not matter. This is what you have to understand. They absolutely do not matter, right? So I hope that makes kind of sense to you, what I'm trying to say here, right? Because you know, there is a lot more going on. So what's going to happen now? Let's have a look at what we did. So we want to move back into the patterns. We want to see what happens. So technically, you know, the diminishing returns and lengthening cycles comes into play, right? So when we're talking about diminishing return and lengthening cycles, what we saw here was approximately, let's just say up to here. So forget the bottom. Let's do this, because this is where the fun is. This is where the fun is. So this is the bottom of the market. So from the bottom of the market right here, bottom of the market to the top, right, of 2017, from where we actually had the dump to here, we had a 10,000%, fair play. And then we had a, so we had the 2020 dump here. So let's have the 2020 dump here. And let's move back up to the top here. We had a 1,600% approximately. Let's just call it like that. So what's going to happen now, right? So let's take this and say, okay, we did this much back then, and obviously, you know, there are other patterns as well. We can also count those, but let's just focus on this area and focus on this area. So remember, this, all right, is up to, so we've got from August 2015 all the way to 2017. So this is a very long time, right? 2 year cycle. You can see 2 years up and down, up and down. People said bull market, bull cycle, this, that. And then we had the bull run here, but actually we had the bull run starting from here. You see what I mean? So sometimes you got to look at the bigger data. Like for me, I've said clearly, openly, I've said it to everybody. The bull run did not start in 2020. Bull run started in 2019. What I meant by that was bull run started here. So if I was to calculate from this particular zone and continue up to here, well, guess what? We're up 1800%. We're up 1800% compared to your 1600%. Right, compared to institutional 1600, we're up a lot more, right? So 1800, actually I moved it up too much, but the point is here. There we go. Let's just put it here. I'm trying to put it. I know what's going on because I've got too many bars open, but yeah, we're up 1800, so we're 200% better off than everybody else. Now let's just halve on that. I'm just going to halve that, right? I'm just going to say, you know what? Forget all of this. Forget this particular one. Let's just use half of this metric, which is 800, right? So let's just use 800% from here and move up, right? And we want to say 403 bars. Let's just do 403 bars. So we are duplicating, actually, why am I even doing that for? Let's do it better here. Let's come here, let's duplicate this, clone this, and let's put this here. So now you can see we have cloned this, right? And we're saying, okay, we're gonna have this 2020 pattern play here, exactly from there to here. And if we did, and obviously, so here we're just doing the day, 403 days. Now let's move it up 800%, right? We just want to move it up 800%, nothing more than that. We're going to do half of this, right? And also I'm going to lengthen the cycle as well, just to kind of show you what I mean. So let's, okay, 800%. So we've got 800%, which is not exactly half, but half enough. And we want to lengthen the cycle. So what we're seeing here is the cycles are kind of getting longer, right? So this was a big long thing. So you got 846 days. Here we've got 403 days, but in technicality, as I said, if you want to really count, you can count all of this up to this point here. And if you did that, then you get 848 bars. You see what I mean? 848 bars, right? So let's just do this, 848 bars, right? Let's move 848 bars, and we're going to make it slightly longer than 848 bars. So we do, say, approximately 900 bars. 48, let's do 850. Let's do 850. We just give it 2 days more than the previous cycle. 2 days more than the previous cycle. How about that? Okay, and we're giving it 800%, nothing more, right? So we're just giving it half of what this cycle has given us. You know, fair play, right? There's one way of doing it, so it won't even go to 800. Come on, 800. There you are, right? So what do we see here? So what you know, look at the price here. That's what I want to show you. Just have a look at this particular price here. What do you see here? What do you see here? And what date do you see? I mean, the date doesn't even show up, right? Because of the time frame. So this is something I've been trying to explain to people, that the moving average, your death cross and your golden cross are not 1 week, are not 1 day, you know, are not 10 day. They're usually months late, months and months and months late, right? So when they are months and months and months late, you using that as a signal, waiting for your favorite YouTuber to tell you, guys, we just had a death cross. It's the bad, wrong information. Your YouTuber that you follow should have told you this down here. Your YouTuber should have told you that he sold, or you sell, whatever, however way he does it, should have told you that I'm out, I'm waiting to go all in here. I'm doing the dip. All right, I'm only going to buy once, right? And if it comes back and dips back, I'm buying again. That's what he should be telling you is, guys, I'm going all in around these levels. I'm buying as much as I can within these levels for my long-term holding portfolio. My trading portfolio, I'm going to start trading as soon as I come back to these 43, 47 levels. These are trading portfolio. Your holding portfolio, cash buy, should have been here. You don't trade with cash. You buy with cash, right? And this is exactly what I've done, right? And what I've advised to some of my private clients. And this is what we're following, and we're saying this is what we're going to do. We are trying to front run everybody. We are 2 steps ahead. I've always said this, right? In this channel, I'm trying to keep everybody 2 steps ahead. So when we're talking about 50-day moving average, or sorry, the death cross, we already planned for it. right? We already plan for it. When we say we're buying this particular zone, we're planning for it. Even if it comes to this 20K, we know some people like to talk about the 20K. How about this? Let's come to the 20K. What are we going to do? We're still going to buy. Why? Because the 20K will be the same as this particular area. This is the perfect buying opportunity, and you hold. Then we say, obviously, if you buy, so you're a spot trader, you just bought, you buy for 5 years. If you buy for 5 years, this is the curve you follow. This is the pattern you follow. You are bound. So we're looking at this 1600%. We're bound to do at least half that in that similar time frame. So my bull run started here. Your bull run started here. Actually, your bull run started after everybody said your bull run started. But this is the same thing. Like, you know, it's hard. It's hard. Obviously, this is why I sometimes get frustrated. And remember, I'm just a straight up guy. I do get angry a lot. You know, I'm definitely an angry YouTuber. But the fact is look, people are not giving you the fact. That's the fact, right? The fact is nobody's telling you the facts. Nobody's teaching you what to look for, right? Everybody's just giving you something when it's too late. This is where the dump happened. So technically from here, this box here, this is where the dump happened, and you're getting the signal now. This is why this does not bother me, because when this gives me a golden cross thing, I've already bought here. Make sense? So I've bought here. Some of the other guys I know as well, even on the free groups and everything, and you know, the public groups, they all bought here. They all bought here. And guess when we're going to see a signal to start buying? When we come back down here, right? So you front run everybody. The institutions, you've been buying with the institutions while everybody else is focusing on this death cross, because that's what it is. Of course, the death cross may come down a little bit. So what? Buy even more, because guess what? After the death cross is the golden cross. So I just wanted to, I know I spent a lot of time on this one, so I'm sorry. But it's really important that I had to explain this to people, because a lot of people are just not seeing what we are seeing, right? And this is Ethereum dominance charts. Actually, forget the dominance. I want to do ETHUSD. Let's do the Ethereum chart and see what Ethereum is actually doing right now. So Ethereum, the trend line recently formed. So we had a trend line forming recently, as you can see, this particular trend line, right? So Ethereum still, let's extend this trend line, by the way. Let's extend it, right? So let's extend it. So as you can see, Ethereum is definitely struggling to get above this particular line, and it's also following the BTC marks, right? So as you can see, we would have had a trend line here, but it's not completed. It's doing the similar thing as BTC, right? It's just trying to create a new area. That's what it's trying to do. Also, this I don't need anymore. This is finished. So I'll get rid of this. I won't be publishing anything today. This particular video I've done for, this is for everybody, right guys? Everybody, you can understand from this particular zone, this particular chart, how I've mapped it for you. I hope I explained from A to Z exactly what these differences are, what the percentage are, when the whales buy, right? When there's fear in the market, that's when they buy. It doesn't matter how low it goes. So for example, what I'm trying to say here, let's get this drawing out of the way. So for example, we have a death cross here. Whales didn't care, and we also have a name for it. It's called accumulation, consolidation. When we are consolidating, you get out and you go and you buy until you finish, until you come to a level where it reverses. You say, okay, I've bought enough. Let's wait for the market to move up, and you enjoy those bonuses. That's what you do. You enjoy those bonuses. These are bonuses for you. These are what you do. You sell the top, you buy the bottom, you sell the top, you wait for it, let it dip, no problem, carry on. Obviously, when we see a slight difference, if we've made, so we bought it here, we started buying down here, dollar cost averaging in, buying up to here, and then we dollar cost average up all the way up here. We have a target to make 100%, 200%, 300%, 400%. We make that. Once we made that, we have half in crypto and we have half in cash. Then we wait for another dip. When the dip comes, perfect opportunity, something like this, a black swan event. When we get a black swan event, what do? We buy straight away. Then we have a white swan event, we do that. But for you following the 50-day moving average and the 200-day moving average, and you're doing your death cross and you're doing your golden cross, you're too late, my friend. It happened here. This wave happened here, right? You entered late if you're following this one specific thing. So all I can say to you is anybody who's talking about a death cross or a golden cross, do you know what you do? You get in there and you do it straight away because you're too late. You're months late, weeks and weeks late, right? So yeah, I'm not gonna make this any longer. I hope this was informative. Like, share and subscribe, and I hope this time the sound is a lot better. So let's hope this uploads okay. And as I said, I'm not going to be posting anything on the private groups today. This video should explain everything to everybody. This is universal. I will be doing stuff like this every now and then. And the members thing on YouTube, it's going to be something new. Hopefully I'm going to soon start moving everybody over to the members part and start doing more deep dive stuff there. Right, because I just want serious people. I don't need a bunch of jokers basically who have no faith, who don't understand the market, who are not willing to understand the market. Because the most important thing is, it's like, you have to be willing to understand it. If you're not, then I can't really help you. You know what I mean? Because it doesn't matter. It's going to be virtually impossible for me to explain something to somebody, because I'm not here to try and convince you. You're not. I don't want anything from you. So if you're not understanding it, what can I do? I can't help you. You know what I mean? But rather than be frustrated, I might as well just work with the serious people and just continue, right? That's what I want to do. I want to help serious people get out there and do their thing and enjoy life a little bit more. So hope this helps. Yeah, like, share, subscribe, and I'll see you on another one. Adios, amigos.